Good morning to all of you. Last time we have completed, we are on chapter number 8. Chapter 8, Source of Business Finance. In business finance, we all know two types of funds are there, owners fund and borrowed fund. Importance of finance we have completed. Then in owners fund, these are three types: equity share, preference share and retained profit. Equity share, preference share we have completed. Now today difference between equity share and preference share is also completed. Now today retained profit. Retained profit, which is also known as or plugging back of profit. Plugging back of profit. We are also doing the same thing. Whatever income earned by our family, out of those total income, a major portion we are spending on consumption of various types of goods and services, and always we try to save a minor part of income in bank or post office, and then year by year, month by month, year by year we are saving, and after few years it becomes a huge fund. Then such huge funds can be used or can be utilized in order to meet our major expenses. For example, huge fund can be used for purchasing durable items like TV, AC, vehicles, two-wheelers, four-wheeler, or in order to meet higher studies expenses. So such huge funds can be, or for some accidental expenses, for medical expenses, such funds can be used. In the same way, in business also, whatever income is earned by business unit, out of those income, after meeting or after paying compulsory payments like electricity bill, then tax, then other salary and wages of employees, after paying all compulsory payments, whatever profit is left, that is called divisible profit. Divisible profit or residual profit. Once again, whatever income is earned by business unit at the end of the year, out of those total income, total profit, after paying all compulsory payments like salary or wages to laborers or employees, interest on different types of loans, electricity bill, then other expenses like tax to the government, after paying all these compulsory payments, whatever profit is left, that profit is called divisible profit or residual profit. Now out of this divisible profit, company has to divide this divisible profit in two parts. It depends on company's nature or company's decision. Means major part of divisible profit they can keep for savings, and minor part they can distribute in the form of dividend, or on the contrary to it, means opposite of that, a major part they can keep for dividend. Dividend means which is distributed among shareholders, and minor part means less percentage they can keep for saving. They can save. So diesel profit has two parts. One part is for saving, and other part they are distributing among shareholders in the form of dividend. Sometimes the whole diesel profit is kept for saving and they are not paying any dividend to shareholders, or diesel profit can be distributed among shareholders in the form of dividend and they are not able to keep for savings. Means it depends on management, it depends on company's decision in what proportion they can utilize a divisible profit. But in most of the cases, out of divisible profit, a minor part is kept in the form of saving, means they are keeping aside, they are saving a minor part of divisible profit, and year by year, when this savings becomes a huge fund, then such huge fund can be utilized in various forms. For example, for expansion of business, for example, for meeting different types of expenses, for example, in order to pay any liability, such funds can be used. Such accumulated profit is called retained profit. Year by year, whatever amount is saved by a company, after few years it becomes a huge fund, and this is called accumulated profit also, or retained profit also, or plugging back of profit. And such profit can be used by the business unit in order to fulfill various types of expenses, in order to bring expansion of the business, in order to adopt new technology, in order to pay the liabilities, means in any way, or in order to meet any accidental expenses. So in different forms, such huge funds can be used. Now, retained profit according to textbook. Meaning, during sound financial position, means when company has sound financial position, means their financial position is very strong, company earns more profit. After earning profit, instead of distributing all profit in the form of dividend, company keeps some part of profit in the form of reserves, means savings in business, for future payment of business liabilities, or this accumulated profit can be reinvested in the business. It is called plugging back of profit. Once again, during sound financial position, company earns profit. Out of those profit, after paying compulsory payment, whatever amount is left, that is called divisible profit. Out of that divisible profit, a minor percentage or a certain percentage can kept aside in the form of savings, and year by year they are keeping aside a part of saving in different account, separate account, that is called by different names: reserve and surplus, retained profit. So year by year they are saving a part of divisible profit, and after few years it becomes a huge amount. That savings year by year is called accumulated profit also, accumulated profit, or retained profit, or plugging back of profit. Now what is the advantage of retained profit, or how we can utilize this huge fund which we are keeping aside in the form of saving year by year? How we can utilize such huge funds, or advantages? Now, what is the advantage of retained profit? What is the advantage of savings? The first point is useful in times of recession. First point is useful in times of recession. So here total 8 points are given, so any 6 points you can do. Useful in times of recession. So what is the meaning of recession? First of all, we all know that business is full of ups and down, or there is always uncertainty in business. Anytime any risk may occur in business, or it may give a negative result to the business. Now what is recession? When production is very high. Why production is very high? Because demand in the market is very high. If demand in the market is high, production is always high. Means here all individuals are getting employment. Means employment percentage is also high. That time is called prosperity period. After that, when demand decreases in the market, production also decreases, and unemployment increases, means income of individual decreases. that is called depression period. Depression period. Again, this is also known as trade cycle. Again, when again demand starts increasing. When again demand starts increasing means business is coming out of this depression period. That period is called a recession period. So during recession period, when demand is very low, when production is very low, so business units are able to face, sometimes loss also incurs. So business units are able to face such losses. During that time, these funds, this huge fund can be used or utilized at the time of recession in order to face various types of expenses, in order to face various types of losses. Now, according to textbook, negative changes in the market as well as to face difficulties arising in the times of recession. During recession, demand is very low in the market. We are not able to sell our products, but various types of fixed cost, fixed expenses we have to face. For example, whether income is earned by the business unit or not, we have to pay the rent of factory. We have to pay rent on different types of machineries. We have to pay interest on loan. Even our income is low. So during that time, during that recession period, we can use our such saving amount, huge fund or retained profit. So at the time of recession, this type of huge fund, this type of saving amount can help to the business. Second point, useful in implementation of future plans. Useful in implementation of future plan. Now, according to textbook, for implementation of future plans like development of business, suppose business has decided to bring modification, to bring modernization, to adopt any technology in the coming month or within 2 or 3 months. So, such expansion, such modification, such modernization, such adoption of technology is possible by the business unit if they have huge fund in the form of saving, means if they have retained profit. Such means retained profit can also be used for implementation of future plan like adoption of new technology, like bringing modernization in the business, bringing modification in the business, or starting any new project. So such funds can be used in implementation of any future plan which has been decided by the business unit. Second point, for implementation of future plans like development of business unit, expansion and modernization, there is need to raise capital, means in such type of matter, expansion, modernization, development of business, adoption of new technology, we needs huge fund. At that time, we can use our retained profit, we can use our saving amount. Company does not have to depend on external sources. Does not have to depend on external sources means during that time, company does not require to borrow money, does not require to take loan from bank. They can use such retained profit for expansion, for modernization, for modification, for adoption of new technology. Third one is, simple point is, useful to purchase new asset. Useful to purchase new asset. So anytime, means regular interval, business units are required to replace their old machineries, replace their old furnitures, means they are required to purchase new assets, and assets needs huge fund, or in simple language, asset needs money. At that time, we can utilize our retained profit in order to purchase new assets. Means again, we are not required to depend on any external factor. Means we are not required to borrow money. If suppose that time we are passing through financial crisis, means there is shortage of money, and that time it is compulsory for us to purchase any new asset. It is compulsory to purchase machinery because machinery is required for production, and that time we are passing through loss. During that time, by utilizing this retained profit, we can purchase our machinery or new asset easily, in a very easy manner, and we can continue our production. So retained profit can be used to purchase any new assets like machineries, furniture, vehicles, so that our production or our business cannot interrupt. So at the end of, once again third point, and at the end of estimated life of asset. Now what is the meaning of at the end of estimated life of asset? Suppose company has purchased machinery 5 years back. One machinery they had purchased 5 years back. We all know that every asset has certain life. Suppose this machinery we can use at least maximum for 10 years. So when 10 years is completed, we need to purchase new asset, and such new assets require huge fund. At that time, if we do not have fund, if we do, or we are passing through financial crisis, or in that year loss incurred, during that time, without any problem, without any difficulty, by utilizing retained profit, by utilizing this saving amount, we can purchase new asset. The 3 points are completed. Fourth, fixed dividend policy. Fixed dividend policy. When sometimes company adopts a stable dividend policy, then retained profit become useful. Here one line explanation is given. When sometimes company adopts a stable dividend policy, then retained earning become useful. Now how? Fixed dividend policy, or for fixed dividend policy, retained profit can be utilized. First of all, what is the meaning of fixed dividend policy? We all know that in order to raise funds, we are talking about public company. In order to raise funds, company has to issue shares, and the person who purchase shares are called shareholders. In general language, we can say these shareholders are investors. These investors have invested their funds, their money into our company. Now, what is the responsibility of company? The company's responsibility is to increase the value of share, as well as in order to satisfy shareholders, company has to pay regular dividend every year to the shareholders. If shareholders are satisfied, it may be possible that in future shareholders will invest additional amount into the company, or new investors will also join the company. Means if company wants to build up their reputation in the market, how they can build up their reputation in the market? By using fixed dividend policy, means by paying dividend regularly, means every year. Even if any year loss incurs, then also if they are paying dividend, it will satisfy, it will increase, it will satisfy the shareholders, it will increase the reputation of the company in the market. As a result, many other investors will also join this company. But how this is possible? If company has retained profit, means if they have huge fund in the form of saving, that saving can be utilized by paying dividend to the shareholder for many years, for 3 years, 4 years, they can utilize these funds, and in this way they can adopt fixed dividend policy and they can satisfy their existing shareholders. In this way they can build up their reputation in the market. So retained profit or plugging back of profit can also be used for fixed dividend policy. Fifth one is burden free assets. Burden free assets. Now what is the meaning of burden free assets? First of all, according to textbook, as it is a source of ownership capital, retained profit, there is no need to create burden on the assets. There is no need to create burden on the assets. Now what is the meaning of burden on the assets? Many times, if company needs huge fund, so they have to borrow money. They have they have to borrow money from bank or any other financial institution, means they need to take loan from bank or any other financial institution. Borrow means here loan amount. So once again, if company needs huge fund either to purchase machinery or any other fixed asset, they have to take loan from financial institution. For example, they need to take loan from bank, and against this loan they have to keep the property, keep the papers or documents of the property to the bank. This type of loan is called mortgage loan. This type of loan is called mortgage loan also. For example, they have to keep the documents of building, they have to keep the documents of costly vehicles, they have to keep the documents of machineries to the bank, then they are getting loan. This is called burden on assets, means we are keeping the documents of different property, different assets to the bank in order to raise funds. But if we have retained profit, if we have savings, huge savings, then such savings can be used in order to utilize the money in order to purchase any fixed assets, means we can keep our assets free of burden. That is called burden free assets, means we are not required to keep the papers of different assets to the bank in order to take loan. Instead of taking loan, we can utilize retained profit either for expansion or purchase of any fixed asset or meeting any expense. Means in simple language, burden free assets means if we have savings, if we have retained a profit, we are not required to keep the property, keep the papers of property or assets to the bank in order to take loan. That is called burden free assets. And last point, sixth point, simple point, borrowed capital can be repaid. Borrowed capital can be repaid. Simple explanation is there. Borrowed capital means if in past we have taken any loan from any bank or any financial institution or from any other source, if you have taken any loan or we have issued debenture is also a kind of loan. So in order to pay this debenture, means loan amount, in order to pay the loan of bank, we can utilize our retained profit. Why? If we repay the borrowed capital on time, we have two advantages. First, by making timely payment, it builds up our reputation in the market. Second, interest burden will reduced. By utilizing retained profit, by utilizing saving amount in order to pay the loan amount, loan or debenture is called borrowed capital. So by paying loan amount or debenture amount, we can reduce our interest burden, because on loan or debenture we have to pay interest. So in order to reduce the burden of interest, we can utilize the retained profit by repaying, returning the borrowed capital. Means retained profit can also be used for paying the borrowed capital. So this is all the advantages of retained profit. So once again, advantages of retained profit: useful in times of recession, means when demand production is very low, income is very low, business units are facing losses, that time also we can utilize this saving amount, means retained profit. If we have any plan, future plan, for example, we have decided to implement or bring modernization in the business, we have decided to adopt new technology in the business. In order to adopt such new technology, we needs fund, that time we can use or utilize retained profit. Third, useful to purchase new assets. If we all know that every asset has certain life, after completion of that life, then we need to purchase machinery, we need to bring reconstruction of building, that time we needs huge fund. During that time we can utilize that retained profit. Fixed dividend policy, company can pay fixed dividend or regular dividend for many years by utilizing retained profit. If they have retained profit, then only they can adopt fixed dividend policy. Burden free assets, whenever they need money in order to purchase machineries, in order to pay the liabilities. They are not required to take loan against their property. Means they can keep their property, they can keep their assets burden free by utilizing retained profit. And last one is borrowed capital. If in past, if they have taken any loan from bank or any financial institution, or if they have issued debenture in the past in any year, then they can utilize the retained profit by paying the liabilities. Means they can reduce their liabilities by utilizing retained profit. So these are all advantages of retained profit. So owners fund is completed. So out of 8 points, you can do any 6 points of your own choice. And below that, limitations of owners fund is given, that is not required to do. Next one is borrowed fund. Now one is owners fund, and other is borrowed fund. In owners fund, we have completed equity shares, then preference shares, and today we have completed retained profit. These are all owners fund. This is one type of internal, this is also known as internal source of finance. Internal source of finance. On such finance, business units are not required to pay interest. This is called owners fund, internal source of finance. On such finance, business units are not required to pay any interest. Now second part is borrowed fund. Borrowed fund. Now first of all, different types, means different examples are there for borrowed fund. One is debenture. These are the examples of borrowed fund. Debenture, then bond, third one is public deposit. Fourth one is, according to your textbook, fourth one is loan from financial institutions. Loan from financial institutions. And fifth one is commercial bank, means loan from commercial bank. Loan from commercial bank. Commercial banks. When we are taking loan from commercial bank, they are providing loans in different forms. Like one is simply it is called a loan. Second one is cash credit, and third one is overdraft. First of all, try to understand different types of borrowed fund or loan amount. Loan from commercial bank has three parts: loan, cash credit, overdraft. Sixth one is trade credit. Trade credit. These are the different types of borrowed fund. And seventh, you are not required to do internal corporate deposit. Debenture, these are the examples of borrowed fund. Debenture, bond, public deposit, loan from financial institutions, means financial institution means which are not bank, like Muthoot Finance. Loan from financial institutions, loan from commercial bank, and commercial banks are providing loan in different forms. These are loan, cash credit, overdraft. Next one is trade credit. So these are the different types or different examples of borrowed fund, where first point is debenture. Now on all these types of loan, business units are required to pay interest, whether it is debenture, bond, public deposit, then loan from financial institution, loan from commercial bank. On all these type of loan, business units are required to pay interest whether company enjoys profit or losses. When in any year company is facing loss, then also they need to pay interest at any cost. So first one is debenture. First borrowed fund or first example of borrowed capital, debenture. What is debenture? First of all, from this example try to understand debenture. Debenture means, again, suppose company needs 1 lakh rupees and they are dividing this total huge amount in smaller parts. Suppose one smaller part is of 100. It means if we divide 1 lakh by 100, means total 1000 parts are there. Now earlier we have studied that these parts are called share, because share, what is the nature of share? When investors are investing money into the company, against that they are expecting some profit, means some dividend. But here company has divided the whole 1 lakh rupees in 1000 parts. 100 in this way, 1000 parts, and they are taking this money from investors in the form of loan, not in the form of share. So 1000 parts are there, each part is of 100, total it becomes 1 lakh. Now right now they are taking this 1 lakh not in the form of share. Share means when they are taking this 1 lakh in the form of share, they are not required to return this amount first. They are not required to pay fixed rate of interest. And in case of debenture, when they are raising or taking money in the form of debenture, in that case, any investor who is paying this amount, suppose 1000 debentures are there, I am purchasing 20 debentures. 20 debentures means 20 into 100, it becomes 2000. Means I had paid 2000 rupees to the company in the form of loan. That loan amount is called debenture. The smaller part of 1 lakh rupees is called debenture. And debenture means here company is taking loan. So what is debenture? Debenture is an acknowledgement. Debenture is an acknowledgement. What is acknowledgement? Later on. Debenture is an acknowledgement of debt. Debenture is an acknowledgement of debt. Debenture is an acknowledgement of debt on which fixed rate of interest is paid by the company and promised to return the amount after a specified time period. After a specified time period. So today only definition is right. Explanation we will do in next lecture. So debenture is an acknowledgement of debt on which fixed rate of interest is paid by the company and promise to return the amount. Amount means principal amount after a specified time period. Now any doubt you can